month. And we'll have a look at how the King went, MVR. But before we get into it, just the why we're doing it. We're doing it because of this thing here, the commodity cycle. So if you haven't seen this before, welcome. From the rooster too. So 1800s, up and down, and here we are here. So we're just starting the party. So this is basically a shorter term view of this area here, because we don't have data on the computer back then. And that's what we call a lovely cup and handle pattern. Nearly breaking the handle there. And just to put it into perspective, this is the mining industry as a percentage of global equities over the years. So it's a smidgen. Especially like with the gold stocks. One big tech stock, you could buy every gold miner in the world, in the planet. Okay, so let's have a look. Oh yes, so one of my favourite subscribers, Mr. Monk. He's onto the ball. He's Rudy. You'll be pleased to know that MVR no longer has Sol in it. Yes, that's because Sol wasn't really a resource company. They owned a big share of New Hope. Also, there's been a reweighting, so there's slightly less of Woodside, BHP, Ray, Fortescue, but a bit more of the other names like Linus, Northern Star, and it is good. I like the reweighting. So we'll try and look at monthly charts. We'll just have a quick look at the weekly for him. So another good week for him. Still got. MVR's like the tank. I'll refer to him as the tank as well when building your portfolio. And I'll have a whole session on that at the end of the video on how you build a portfolio around the tank. But this is the medium term target, not next week, not like give it a year or so. So we're not day trading with the King, MVR. So I'll just go back to a monthly. Oh yeah, we're on the monthly now. Okay, so changes made. Let me just fix that up. Alright, so if you haven't seen him before, so basically it starts off with 765 down to BHP, Woodside, Northern Star, Rio, Linus. We'll go through the charts of all of them, but as we go through them, you'll see the weighting gets smaller. So you're down to here where you're getting 1%. So the first ones we look at have the higher weighting, and you can see like Linus has moved up, Evolution's moved up. So there's a few, in general, sort of the gold stocks have moved up, probably due to their market cap moving up. Okay, and if we have a look at so the VAS, the Australian share market, at its highs. Now I use ratios charts, and some people have asked how do I get them. So if we look at so we take, I'm not going to do this for everyone, I'll just do it once. So we take the chart of MVR and we divide it by VAS. Okay, you get that chart. Okay, so basically you're taking that chart pattern there and you're dividing it by that chart pattern there, and you get that. Okay, so that's why it's important to use ratios, because generally stocks move from left go this way in general, but they go down at different rates and up at different rates, and ratios let you work out what's going on. So we can see since August, really, the outperformance. It's part of the reason I started this channel around April, because I could see the bull, well, especially gold, the resource boom. So that's pretty solid outperformance over VAS. And I've had a number of people say they've been converted. They switched their VAS VGS to the King MVR with ninjas, or that will be disclosed at the end. Okay, so we got, so he hasn't killed. So this is MVR over QFN. So the ASX, banks and Macquarie, the financials. So it's broken the declining pattern here. So that's a pretty good solid month. To put a nail in it, it really needs to kick through here. But yeah. Okay, MVR over VGS. Actually, let me just get rid of the volume. Okay, MVR over VGS. Okay, so MVR over VGS is continuing. MVR over IVV. Moving on nicely. And then the big one, MVR over NDQ. So he hasn't put it in, but he's certainly basing to outperform the NASDAQ, the old king. And he's not the exciting one, he's just the steady one you should have in your portfolio. Then we have ninjas, which I don't cover in this video. Alright, so MVR over VDHG. So, alright, so that's the king. He's just pays the div 4%, and then outperforms the others. Alright, so let's get into the underlying shares. So before we do it, this is the iron ore price. So I don't expect iron ore to shoot up as long as it can keep sideways. We've had the BHP issue and blah blah. Anyway, it's not bearish. Okay. Then if we look at copper, so we're looking at monthly here. So this is back to the 2000s, right? So you're getting a big picture. So copper's just squeezing here. So that was the bit of a tantrum, a nothing thing. So copper's looking really good. So who does that flow through to? So the biggest holding, we've got BHP. He's finally cracked the dome. Got a bit of a declining wedge here. A bit of support here. So even the iron ore wobble from China, it's setting up nicely. Look at that big green candle consolidation up generally. Okay, oil. Okay, so oil, we're at the bottom of the range. So that's the other thing with this resource ETF, is resources are at the at the bottom, except for gold. At the bottom of the cycle here. Oil, it's a hard one to pick, oil, because it's so political. But it's a lot of producers need $60, otherwise they won't produce it too. So we're at 61. Anyway, that's oil. So what do I say? Then we got natural gas. Natural gas is actually looking quite bullish if we just go to a weekly chart. So you've got a bit of a declining wedge here. So it's making the right moves. Okay, so why did I show you that? Because of the king, Woodside. I've had a few goes at him. I was just recently saying to buy. He's 7.2% div. He's just hanging on there. If you look at a quick look at the weekly. So big support here for Woodside. So that's alright. So gold. Okay, well, it's pretty, actually, well, what we can see is it's met my target. So that's this distance from here to here, add it to here. Doesn't mean it's going to crash. Gold's going a long way. But in the short term, it might be a pullback, but anyway, we're in for the long run, this one. So Northern Star. So that's beautiful. We were, I don't know, I wish people who haven't watched this channel before did, because we were buying Northern Star back here back here. And it's just going to get worse for me, because if you're new, because it just gets harder for an entry point. Anyway, we go on. Fortescue, 7.3 div. So it's just consolidating. That's doing fine. The idea of this ETF is not to rocket. It's just to pay nice div, maybe 4%, and give you some decent growth. Okay, so Rio looks beautiful. Looks wonderful. Linus, so that's our rare earths miner. There's that cup and handle pattern. Looks beautiful. Evolution, that's our gold copper. Looks wonderful. I mean, if anything, these things could, well, I hope they do consolidate and have a breather, because it just helps. Origin, so Origin looks like it's pays 4.9 div, so it looks like it wants to come back to support here probably. Santos, so if you didn't know, the people who are going to take it over pulled the pin. Okay, then we've got so aluminium prices, just knocking on resistance there. Alumina looks pretty sick. At the bottom of the range. Zinc's zippity doodah. It's broken through the little triangle here. Then we've got the lead price. Got a bit of a channel here it's trying to break out of. Looks good. That's what you want. So why do I show you that? Because of South 32. So South 32's trying to move into more Link and Z. It's right on support here. They've had to close one of their smelters because of our stupid electricity prices and whatever. Don't get me started. Anyway, it does look like they've found a bottom if they can get that zinc and lead stuff going. So anyway, it's in the ETF. Then we've got Orica. Okay, so they're into the blow up mines business. So there's going to be, that's just doing some nice consolidation at the highs here. That's good. Then we've got Ramelius, gold producer. They've done really well. Okay, now we've got lithium. Okay, so it's definitely broken the long term. I mean, just have a look at that, what it used to be up here. Anyway, it's broken and it's now just consolidating. So why do we do that? Because we're looking at Pilbara Minerals. So Pilbara is now breaking through again. So we were buying these things down here. That's when you want to buy them. Declining wedge. Anyway, it is what it is. So it's going up. Worley. I'll go back to a monthly chart. Okay, global engineering business. Got another declining opening wedge there, so yet to break through. Ampol. Got the declining open wedge there. It's broken, so that's fine. Bit of consolidation up. Perseus, gold miner. Obviously, you can see gold charts look pretty impressive. And as the gold price keeps going up, they'll keep going up. Gold's probably my second bullish after silver metal. But silver doesn't get a gig in this ETF because we don't have any we don't have any silver miners. Okay, coal. We'll have to go to a weekly chart. Okay, so thermal coals. So it's broken the declining wedge and just trading in this range here. So why do I look at that? Because Whitehaven coal. I'll go back to a monthly chart. So you can see it's again these declining wedges, they're all long-term bullish. That's the previous direction. So, you know, we're not buying at the highs here. Mineral resources. So they're sort of half mining services, iron ore and a bit of lithium as well. So they've broken the decline. That's the best time to buy stocks with these, break these declining wedges, as a side note. So mineral resources, that's fine. It's consolidate up, that's all you want. Okay, another gold stock, Genesis. Okay, we're buying back here, that's fine. Another gold stock, Capricorn, it's doing fine. Sandfire, we'll just see, we look at look at this. See, I just sat there, had some people worried. Just sit and wait, then it goes. We saw the copper price now starting to giddy up. Okay, Horizon. So you see long term, we're at the bottom. So they're rail freight operators. Pay decent div, yeah, 4.9. Just hanging along support here. It's done the hard work, broken through. Dino Nobel. This is actually a new addition. I think they got rid of Sol and brought these guys in. They used to be Incitec Pivot, global manufacturer and supplier of commercial explosives. So there's a lot of mines being blown up. Actually, I just saw that. So we've got a bit of a breakthrough resistance there, so that's all good. Okay, Regis, another gold stock, knocking on resistance. It's okay. So generally, when you get these big candles, as long as they stay in the top half, it's fine. You don't want like this candle here where it goes past the halfway mark. It's not good. And same vice versa. If you get a candle that engulfs the prior candle, that's bullish. There you go, little chart tip for you. Okay, Iluka. So in that sort of Linus bucket, they stopped doing some processing of some stuff that they wasn't any good. So the people have liked it. It's a bullish pin bar, that one. So it went from here down to here and finished there. Doesn't get much more bullish than that. So he looks good. Uranium. Another sort of cup with a high handle. There's the cup. The handle's usually down here, but anyway. It doesn't have to be perfect. Anyway, uranium, very bullish. It's strange how in Australia we're like the only country in the world, I reckon. I did a video on uranium yesterday. Have a look at it if you didn't see it. But we are literally the only country in the world that doesn't use uranium as an energy source. But we're going to go down windmills and solar panels. That'll save us. Okay, sorry about that. That's not the point of this video. Okay, so Palladium, that's our uranium miner. It should be going higher like the others. But they did a capital raise at $7.25 for existing shareholders, so that's sort of holding them back for now. But long term, they're one of the lowest cost miners. Actually, yeah. Okay, that's another subject, really. Okay, Monadelphous, so mining services. So mining companies, if they don't want to hire their own staff, they go and hire someone from here, an engineer, a brickie, a labourer. Anyway, there's plenty of tailwinds for these guys. 3.5 div, you know, it's not bad. Beach, so oil and gas. See, oil, so they're holding up quite well, considering. I mean, it's hard to. The oil price is severely undervalued. But but I think people play games with it. Anyway, it's fine. That's future growth. Liontown, so another lithium stock. Pilbara's the cheapest cost of production. But anyway, these guys are good. They've broken the declining wedge, consolidating. IGO, lithium, same boat. They do have a share in a mine that's the lowest cost producer. And then they've got some nickel copper and a refinery that kills them. So I don't know if you saw there's a lot of refineries being closed down because electricity's too expensive here. The elbow's going to kill our country. Okay, and then Deterra royalties. So they don't actually do much. They just get a clip of Rio's, sorry, not Rio, BHP's iron ore royalties. But pay a div of 5.5, so it's good to have that inside. They just paid a div, that's why they came down. So, all right, so that's the king or the tank. And next up, we'll go through how I would build a portfolio around it. All right, here we go. Okay, putting the portfolio together by Rooster Productions. Okay, so how I see it is think of it, it's a war game. So the objective is to destroy the enemy who live in the castle, and they've got riches in the castle. So the first decision is what type of attack will I do. That basically depends on, do I want the riches in the castle? So basically if you say yes, you want the riches, then you're saying you want high growth. If you don't want the riches, just means you want income with a bit of growth above inflation. Okay. Alright, so you decided you want the riches. So the plan of attack, you're going to need a tank to destroy the castle, and then some ninjas to go and steal the riches. Okay. Alright, so the tank is MVR, so he just sits in the background there and drops his bombs, throws his missiles into the castle. So he doesn't get his hands dirty really, but he does good hard chunk of it. And then you're going to need some ninjas. So these ninjas do a dangerous job, obviously, because they're going into the castle. So there's two types of ninjas. There's ASX ninjas. So there's ETFs like XMET, which is a sort of, it's got a whole lot of copper, rare earths, lithium, silver miners in there. It's not bad. Uranium miners, your gold miners, your silver ETF, your copper miners, your small companies ETF, like a defense tech ETF, or any of your own growth ideas or shares that you might have. Then we've got some special US based ninjas. So these are which you can't get on the ASX. So these guys do a bit more of a powerful job than the ASX ones. So we've got a rare earth ETF, a uranium ETF, but these are the large caps. These are the medium cap uranium miners. SilJ, which is your silver miners. You get a little bit of them in XMET. GDXJ, which is your mid-tier gold producers. Miners is your senior gold producers. So in a bull market, the mediums outpace the seniors. So that's why I say they've got special growth powers. And LitP, which is a lithium ETF. You get a bit of lithium in there, but you get more depth. So in here, for example, in XMET, you might get 1 or 2 companies in lithium, whereas in here you get about 30. Okay. Alright, so what percent of tank and ninjas should I use? Alright, well, so ultimate risk, like game on, I'll take anything. Alright, then you just go with no tank and just ninjas. Okay, you just go all in. So it can be done. I do have a subscriber who's done the just ninjas, and he in his first month he got a bit nervous because it dropped 10% in a week. Now he's laughing, but ninjas do a dangerous job. So if you're going to have ninja, you're going to expect, you know, a week one of those ninjas could drop 10% in a week. Let's just, you know, set that. That's how dangerous the job is. But in a bull market, I expect them to come back like that sub did. He was in Remex, the rare earth one. Now he's up about 30 or 40%. Or you can go medium risk. Okay, so that would be a 50-50 job, 50 tank, 50 ninjas. Or you can go low risk, but not low risk as in cash. But that would be just the tank. But I'm still, when you go the tank, I'm still expecting the tank to outperform VAS, VGS, IVV. So it's not, you know, it's not low risk like in the bank. There's still volatility, but the tank isn't going to drop 10% in a week. Okay, so you've got to sort of work out your risk profile there. I don't want to be given personal advice around, you know, what. The rooster, I'll get in trouble from the rooster. He's my compliance officer. All right, or you decided, okay, I don't want the riches. I've got enough money. I don't need to make 30-40% in a year. I'm just exaggerating, but these ninjas I expect to make at least 10-20% per annum. I mean, a lot of them are up all that in 6 months. But it's, you know, nothing's guaranteed. It's a dangerous job. You get reward for the risk you take. All right, so you're still going to need a tank to destroy the castle, because you can't. You got to do some work. But you're going to need some drinking buddies. Just sit in the tank with you. So your drinking buddies are like your VHY, SYI, so dividend ETFs, ASX 300 div shares, property trusts. Okay, so in this scenario, what percent of tank and drinking buddies? Well, I'm thinking, like, if you're on ultimate income, then you go like 30% tank, because the tank's going to pay you a 4% div. So you can put that in the bank. And then say 70% drinking buddies, who'll pay you, I don't know, 6%. So that you still got you could just have drinking buddies, but they'll drink too much and they won't do any work. So the tanks, the growth performance of the tank will outperform the drinking buddies. Okay, because the tank's going to outperform VAS, and VAS is sort of the banks and your drinking buddies. Okay, so all right, or you want a good income but a bit of extra growth. So you set the bench, say 50% tank and 50% drinking buddies. All right, so that's just a framework. And each weekend I go through, do a video on the dividend shares and ETFs, and I do a video on all the ninjas. All right, hope you enjoyed that. Let us know your thoughts. See ya.